everyone and welcome to Buy Now Sell Now Weekend. I'm Avinash. This show is dedicated to all of our viewers and all of their stock queries. So let's tell you what's lined up. We've got LT Foods up for discussion as well as queries on Thermax. We also have our portfolio advisor segment. Nenumal Bhatia's portfolio will be discussed today on the show. Well, let's introduce our guests. Avinash Gorakssakar, CIO and Head Research at Precision Investment, is on the fundamentals. On the technicals, Chandan Taparia, Technical Analyst, Derivatives at Anand Rathi Financial Services. First up, let's take on board Marfad's query from Hyderabad. He joins in with his first question for the day. Marfad.
Hi everyone, this is Marfad from Hyderabad. I work in an MNC company. My first query would be I hold 150 shares of LT Foods bought at an average price of 233 rupees. And my query would be, should I hold with the stocks or should I sell? And the time horizon would be 6 months.
Okay, let's help him out and tell him what exactly he should be doing with his investment bought at a level of about 233.9. Well, on the fundamental side, LT Foods has been a stock in the news for buying the rice exports business from HUL. That was for a sum of about 25 crore rupees, and the deal is expected to culminate over the next few months. Management is talking about pretty strong revenue growth as well going forward on account of that, as well as the JV with the Future Group, and saying that the deal with HUL will need the CCI approval, but immediately 50 to 60 crore rupees is the kind of revenue potential. Let's talk a little bit about the fundamental aspects and how exactly he should be approaching this. Avinash, come in on LT Foods. 221 is where the stock is. What would you advise our viewer?
I think I would advise the investor to hold on. I think LT Foods is a very large dominant player in the basmati rice export business. They have a large domestic franchisee also and a very good brand presence in terms of the Dawat brand, which is fairly well known. In fact, in terms of financials, last year was a fairly good year for them. On a top line of 2700 crores plus, they could earn a bottom line of roughly about 75 crores, and the current run rate for FY16 has been equally strong. For the first 9 months, they have done a profit of 73 crores. Our sense is that this year they should be ending at around 95-96 crores, and hopefully a 20-25% growth for FY17 looks possible. So I think valuations look quite strong. I mean, attractive around for an EPS of roughly about 40-42 rupees next year. The stock trades at about 5 times. So I would suggest the investor to hold on. Considering his time horizon of 6 months, I would say 6 months to a year, he could probably look at a target price of around 275. So he should hold on.
Okay, that's the call. It's a fundamentally strong business. Things are looking good. It's been a newsmaker. Of late, 275 is the potential target. Chandan, let's chat technicals. And do you think that this is a good stock that one can hold for the long haul? Does it make sense for him to keep it in his portfolio?
Yes, immediate trend of the stock is positive. Just in the last month, it made a double bottom kind of process near to 180, 182 levels, and after that, it continuously headed to higher levels. Although it has been consolidating in a range from last few trading sessions, but also respecting to its multiple support of 212 levels and holding above its 50-day moving average. So till it remains above 212, I'm expecting this stock to move towards 245.
Okay, that's the call coming in. The stock made a double bottom in Feb near 180. So talking about upside potential, according to Chandan, 245 is the zone that he sees the stock moving toward. Next up, Marfad also has a query on Thermax. Marfad, what's your question?
My second query would be I bought 100 shares of Thermax bought at an average price of 763 rupees. And it's the same question, should I hold the stocks or should I sell? The time horizon would be same again, 6 months. Thank you.
Okay, let's help him out. Thermax is the stock in question. Capital goods as a sector has been in the foray with respect to a lot of attention being garnered on what the government is doing in order to see that the on-ground situation for some of these companies improves, that the overall industrial capex as well picks up. Just recently, HSBC cut the target on Thermax to 829 from 975. They maintained a hold rating, saying that the sustained delay in industrial capex will hurt the near-term earnings growth. We'll have to wait and watch as to what the company delivers by way of earnings. That'll be a cue and a kind of precursor to how the company is likely to perform. Though HSBC believes that the domestic core business growth outlook still remains muted, and in fact, they went ahead and sliced or cut the earnings by about 20 to 26% in order to factor in the near-term business weakness. Once again, Avinash, it's a sector that's a little bit weak. On the whole, what's the expectation from Thermax, not just by way of fundamentals, but how it stacks up against its peers and what it's likely to deliver in the upcoming quarter when it comes to earnings?
No, I think, Avan, clearly, I think Thermax is in a business which is actually seeing a lot of demand compression, and I think clearly the cost of funding has not been going down. So I think new orders have not been coming up that, quickly. But overall, I think looking at the way the government wants to spend money on infrastructure plus the kind of capex recovery we feel would possibly come in after the second, third quarter of FY17, our sense is that FY17 will still be a better year as compared to FY16. And as far as the investor query for 6 months, I would suggest that he should hold on for at least a year before you could see some good upside, because this is a quality capital good stock where a lot of funds and a lot of HNIs are still invested. So I would presume over the next 12 months, definitely a hold on this stock, and with a target price of around 850.
Okay, a thumbs up. The demand environment is improving, and Avinash is talking about how there is certainly potential on the upside for Thermax. Keep this in your portfolio for a price target of 850. Chandan, let's chat about how Thermax looks on the technical charts. Let's take a look at as to how the stock has performed in the last 6 months as well. Will give us a better picture. This week, of course, the stock has been down about 1.7%, but the 6-month chart as well will be brought up. But what's the view? Do the fundamentals mirror the technicals? Is this a keeper?
Yeah, if you look at the technical point of view, the stock is continuously falling down from last 1 year. It is continuously making lower top, lower bottom formation. Although it is respecting to its multiple support of 715 levels from last 2 series, from last 2 months. But the follow-up buying is missing in the counter, and the stock is trading below all the short-term and the medium-term averages. So it would be very tough for the counter to sustain the higher levels, because still it doesn't negate its negative pattern of making lower top, lower bottom formation. The stock can even slide to immediate support of 715 level. So if he is interested to be in the counter, I'll suggest to keep the stop loss of 715 levels. Otherwise, better to shift in other counters like Voltas, Havel and Siemens. These stocks can give more return than the Thermax. So there, I'll suggest either keep the stop loss of 715 or better to shift in the counters like Voltas, Siemens or Havels, which may give the movement of around 15 to 20% if he's talking about the 6-month point of horizon.
Okay, so there are preferred options according to Chandan on the technical side. There is Voltas, Havels, Siemens. You can look to put your money into that. It's a call really that you need to take as to how to approach Thermax. 2 views that we've given you on the fundamental and the technical side. Quick break right here on the show. Come right back. On the other side, Nenumal Bhatia's portfolio is what we'll discuss. Lovely to have you back with us. This is Buy Now, Sell Now Weekend. Nenumal Bhatia's portfolio, that is what we'll be discussing. He's 69 years old, he's retired, he's got a time horizon for the 5 stocks that he holds of the next 2 to 3 years. Let's have a listen to what his portfolio holds. Mr. Bhatia, over to you.
My name is Nenumal Bhatia, 69 years old, retired, having the financial background, living in Dubai. I'm very active in the stock markets, and I have the shares of Force Motor 1,200 at the rate of 2,348.04. Second one, Gati 2,340 shares at the rate of 230.41. Third, Lycos Internet 9,000 shares 45.82. Majesco 1,170 at the rate of 610.25. Shilpi Cable 9,000 shares at the rate of 63.05.
Okay, so definitely has to be said that He is quite an ambitious or risky investor, putting his money in a lot of the mid-cap names. So let's see what the prospects are, whether he stands to make more money on his investments. Mr. Bhatia has Force Motors, Gati, Lycos Internet in his portfolio. Those are just some of the mid-caps that he holds. He also has Majesco and Shilpi Cable. Avinash, let's get in some advice now as to what exactly he should be doing. We'll start off with the first three stocks. He's got Force Motors as well as Gati and Lycos Internet. What's the view?
No, I think as far as Force Motors is concerned, I think he should hold on. I think the company is recording significant growth both in the commercial vehicle space as well as in the auto component business. They have also got a very large order from Daimler-Benz, and which in all probability is going to play out in FY17. So I would suggest if he can hold on for the next 12 to 18 months, he could expect a target price of 4,200 there. As far as the second stock is concerned, that is Gati, I think the stock has come down significantly from his current buying price. But I would suggest that if he has a long-term vision here, he should actually average the stock. The stock is a very large, significant player in the logistics space, and hopefully if GST gets cleared and the macros for the economy also improve, then logistics should improve, and obviously Gati should also start doing well. So we expect that over the next 12 to 15 months, hopefully if GST is passed and the business environment changes, we could expect a target price of 200. As far as Lycos Internet is concerned, we don't have a positive view on the stock. The stock has come down quite significantly. It trades at around 19 odd rupees, and the business model is pretty risky. I would suggest that a stock like say Somani Ceramics, which is a third largest ceramic tile player, has a very unique asset light strategy, and which is now looking at forward at a big expansion in FY17. He should actually invest in this company to get a good upside. I think our target price is around 450 over the next 12 months.
Okay, that's the word coming in on the first three stocks in the portfolio. Some tweaks and changes to be made, but by and large things are fairly okay. Let's move right on and talk about the next two stocks, Majesco. What's the advice over here, as well as a Shilpi Cable?
I think as far as Majesco is concerned, Avan, he should hold on. Again, a very unique play in the in the insurance market, and US being the mother market, they are already supplying to quite a few Fortune 500 companies. We should see a very strong growth for Majesco in the year FY17, and hopefully FY18 should be a blast off year. So I would suggest that if he has a 12-month horizon, our target price is around 750 here, but looking at the next 2 years, probably he could get a better price. And as far as Shilpi Cables is concerned, I think this is again another small mid-cap company where we have not seen very large institutional interest. Again, more of a commodity player, supplying cables to the telecom and to the two-wheeler space, largely to the telecom players. So our sense is that here he should switch and buy a stock like Syntex Industries, which is a fairly integrated player in the textile space, is available at very cheap valuations, and probably over the next 12 months, he could make decent money compared to Shilpi Cables. Our target price for Syntex is around 109.
There you have it. That's the advice coming in on the entire portfolio, Avinash's suggestions. I'm just going to walk you through the recommendations. Stay put in Force Motors for a target price of 4,200. Gati can also be held onto into your portfolio with a target price of 200 rupees. Here's a switch. Instead of Lycos Internet, put your money into Somani Ceramics for a target price of 450. Stay invested in Majesco for a target of 750 and exit Shilpi Cable instead. Put your money into Syntex. Watch out for 109. Thank you so much for sending in your portfolio. And here's an important disclaimer that this is only a model portfolio. You must consult your individual investment advisor before taking any investment decisions. On that note, we'll take a quick break right here on the show. Stay with us for top stock ideas. Welcome back to the show. Let's get in views on the markets as well. And Chandan, I want to talk about what the next week holds for the frontline index, because we've had it pretty rough. 157 points down on the Nifty, 75.50 just about being held on to. We have the culmination of the earnings season that will be kick-starting. What's the view and what are the levels that you'd be mapping?
Yes, if you look at the market movement, index was moving in a trading range of 75.80 to 77.77 level in last 9-10 trading session. In last two session, it broken the immediate support of 75.80 zone, and because of that, we have seen some profit booking. But interestingly, we are observing fresh put writing at 7500 strike, and market is also respecting to its 50-day moving average, which is near to 75.20 level. But now the momentum or the bounce back will come if Nifty manages to hold about 75.80 level. So here, if Nifty holds above 75.80, then we'll see an up move to our 76.60 to 77.20 on the higher side.
Okay, we'll get in a view then, Avinash, in the meantime, as to what your expectation is from the earnings season.
No, I think, Avan, clearly the fourth quarter is going to be a softer quarter. As compared to the third quarter, there could be some marginal improvement. But otherwise, broadly, earnings recovery possibly could get reflected probably from the first quarter of FY17, and Q4 could possibly be a continuation of some sort of margin compression for sectors like real estate or typically PSU banks, or typically even clearly companies which are actually going to be hurt by the sharp depreciation in the Indian rupee. So my sense is, I think, except for a few sectors, clearly something like FMCG or maybe auto components, autos, or for that reason clearly export oriented companies, the other sectors may show some compression. And I think the real trigger would be from the management commentary which we get from the first set of companies, especially Infosys, which starts off on the 15th of this month.
Okay, that's a view coming in on the earnings season. Avinash, meantime, walk us through from a slightly longer term view what ideas you would like to advise our viewers.
Avan, we like two ideas. The first one is Swaraj Engines. I think the reason to recommend this stock is very clearly, we have seen some positive turnaround in tractor sale numbers emerging in the month of March. In fact, Mahindra has reported a 20% growth. Escorts has reported a 28% growth, and this is after a 12% drop for the last 9 months, that is from April to February 2016. Clearly, the management of Mahindra has been sounding very positive. They expect a double-digit growth for the tractor sector, and obviously, if that happens, Swaraj Engines should benefit significantly. In fact, Swaraj Engines is one of those companies which is very investor-friendly. They gave a dividend of almost 330% last year, and in terms of the operational metrics, the return on equity, return on capital employed, they have been managing their balance sheet very well. Again, it's a zero debt business and extremely high operating leverage. So there is absolutely no capex over the next 12 to 18 months. So our sense is that hopefully we could see an earnings of around 50 rupees for FY17, and probably if things work out, there could be a further increase to earnings of around 64. So our target price over the next 12 months here is around 1100. And the second stock, Avan, is from the housing finance space. We continue to like Diwan Housing at the current price. We believe that looking at the kind of exposure this company has in the Tier 2, Tier 3 markets and the kind of loan disbursement, this is the third largest housing finance company in India. And I think with a very strong asset quality, with a very strong balance sheet size, and more importantly with a 25-30% loan book growth, we could see a target price of around 240 here. So this could be another good value pick from a 12-month point of view.
Okay, there you have it. That's a word coming in from Avinash and some top fundamental ideas. Let's take it across to Chandan as well and find out, Chandan, your market outlook. What are the levels you're mapping on the Nifty as well as your top technical trades?
In the next week, if market fails to hold 75.80, then the selling pressure may continue on the lower side, which may take it to 74.80 level. So now the 75.80 is a make or break level for the market to decide the next move of 100-120 points in next coming weeks. Yes, talking about our trading ideas, we have positive view on Bata India. This stock is continuously making higher tops, higher bottom formation from last couple of trading sessions. We have seen sustained buying interest. It has added open interest by more than 23% in the entire series. We are expecting this momentum to continue towards 540 level. So recommending to buy with a stop loss of 513 for the upside target towards 540 and then higher level. Second trade is sell on IRB Infra. The stock has broken the immediate support and falling down with built up of short position. So we are recommending to sell with a stop loss of 225 for the downside target towards 211.
That's the view coming in on the technicals. Hope you've taken note of all of those stock ideas. And on that note, gentlemen, lovely having you with us on this leg of Buy Now Sell Now weekend. Thanks for joining. We'll catch you same time next week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.